that think they're trying to fight inflation are only fighting what is the consequence of inflation and rising prices. And when you look at Kamala's platform, she talks about giving a $6,000 tax credit for families with a new child, or $25,000 down payment for 400,000 first-generation home buyers, or $10,000 tax credit for the first-time home buyers. Who pays for all that? We're already $35 trillion broke on top of unfunded liabilities. Where does that money come from? So, in essence, at the same time, she's, inflating through policy by creating money to fund these initiatives, and we can't afford them. Then she turns around and blames the problem on the grocery stores for price gouging, when it's the government that created the inflation to begin with. And inflation is always, every single time, a monetary event. It's an inflation of the money supply, an increase in the money supply. That is what causes inflation. And when we are creating, in essence, $100,000 a second, 24/7, or $1 trillion every 100 days, well, that's inflation. It's not the cause of the rising, or the rising prices aren't inflation. And we've been indoctrinated into believing the CPI, the Consumer Price Index, the CPI, from the Bureau of Labor Statistics, take the L out of that, and it just be the BS. Is inflation. That's not. Rising prices are a symptom of inflation. It's the irresponsibility, fiscal policy, and brain dead monetary policy of the Fed and of the government that are creating these distortions to begin with. And it just goes to show how uninformed the public is, and certainly how uninformed someone like Kamala Harris is in saying this nonsense. I mean, just looking at it alone, just the cost of farmers to process, package, and deliver their food has gone up 31% since she's taken office as the vice president, and yet she's blaming it on grocery stores. I used to joke that this industry might be the only industry that makes less than the grocery stores, who make on average 1.5%. They're not the problem. The problem is through all of the inputs that have gone up in cost, fuel and seed and certainly fertilizer, most of which comes from Russia, and all of these input costs have gone up, and blaming it on and then trying to impose capping prices. You go back to the 70s. One other thing I'd like to mention, a lot of people say, well, okay, fine, if all of these countries are accumulating gold, what does it mean for silver? And there are some very important things to understand about silver. Number one, first and foremost, China is the number 2 largest producer of silver in the world. And they, for many years, have been a net exporter because they mine all of these other metals. And if you remember, silver is largely a byproduct metal, where in North America, or I guess in all of the mining companies out there, only account for about 25-30% of the silver that comes to market. So China and their smelters had tons of silver for years. They would export it.
As we stand at the crossroads of economic uncertainty, it's essential to grasp the underlying realities of the financial world we inhabit. Many people mistakenly believe that the current attempts by governments and central banks to combat inflation are effective. However, they are merely treating the symptoms rather than addressing the root cause. The inflation we are witnessing is not just a consequence of rising prices, but a direct result of irresponsible fiscal and monetary policies. Let's break it down. Inflation, by definition, is an increase in the money supply, not just the rising prices of goods and services. When you have a government that is spending money it doesn't have, like ours, which is already $35 trillion in debt and facing unfunded liabilities that push this figure even higher, where does that money come from? It's created out of thin air, leading to more dollars chasing the same amount of goods, which inevitably drives prices up. Take, for example, the policies being advocated by figures like Kamala Harris. Her platform includes ideas like giving a $6,000 tax credit for families with a new child, or a $25,000 down payment for first-generation homebuyers. These sound like noble initiatives, but who pays for them? We are already bankrupt. The reality is that these programs will be funded by printing more money, which only exacerbates the inflation problem. And yet, when prices rise as a result of this increased money supply, the blame is conveniently shifted to businesses, like grocery stores, accused of price gouging. This is a classic case of the government creating a problem and then pointing the finger elsewhere. Inflation is always, without exception, a monetary event. It's the direct consequence of expanding the money supply. And when we're creating $100,000 every second, around the clock, that's $1 trillion every 100 days. This level of inflation is not just a minor uptick, it's a fundamental distortion of the economy, driven by irresponsible fiscal policy and a Federal Reserve that's lost control of the situation. The public is largely uninformed about these realities, and that's exactly how the government prefers it. They've indoctrinated us to believe that inflation is simply the rise in the Consumer Price Index, CPI, a measure that has been manipulated and stripped of much of its relevance over the years. But rising prices are merely a symptom of inflation, not the cause. The true cause is the endless creation of money by a government that's addicted to spending. Now let's talk about the implications of this inflation on tangible assets like gold and silver. Rising prices are inevitable when the value of the currency is eroded by inflation. Historically, gold and silver have been the go-to assets for preserving wealth in times of monetary instability. But today, these precious metals are more than just a hedge against inflation. They're a strategic investment. Look at what's happening in the silver market, for instance. China, the world's second largest producer of silver, has shifted from being a net exporter to a net importer. This change is driven by increased domestic demand and a strategic decision to withhold silver from the global market. When a country that was once a major supplier suddenly starts importing, it's a clear signal that something significant is happening. China isn't just buying silver on the open market. They're going to great lengths to acquire it in ways that don't affect the global price. They're purchasing unrefined silver, or d'or, at double the price that Western buyers are willing to pay, and then refining it domestically. This allows them to accumulate large amounts of silver without pushing up the market price, which would draw attention to their activities. This strategy is part of a broader trend. China and other countries in the global south are beginning to recognize silver not just as an industrial metal, but as a strategic asset. They're draining the London Bullion Market Association, LBMA, and the COMEX of their silver reserves, which are now at the second lowest levels in history. The silver market is being methodically and quietly depleted, and when the supply dries up, the price is likely to skyrocket.
As of this year, they have now become shifted from net exporter to net importer, and it's been driven by increased imports and also by rebalancing their domestic market and not sending out all of this silver that they've been accumulating as a byproduct of other endeavors. And this, first and foremost, is really, really big. So the number 2 producer of silver in the world is now a net importer instead of a net exporter. And then all of the talk, I've done 2 interviews recently with mining executives, and both of them have said the same thing, that they are going around the world, China is, and in particular in Latin America, paying double what the West will pay for unrefined doré and silver concentrate, bringing it home and refining it there, and doing so that it doesn't come off of an exchange and affect the price. And so you have a massive drive by China and India. We know, we've documented all of their accumulation of silver to accumulate silver too. And China is going to great lengths to hide it in terms of how much they're producing and how much they're going around accumulating in unrefined forms, because it doesn't reflect in the price. Silver will have its day, and I think China is a perfect example of it. They do things thinking in terms of years and decades. We think in terms of minutes. But when, one of the biggest exporters in the world goes to net import, and they're already the number 2 largest producer in the world, it should tell you where silver ultimately will go. It's not tier 1, but it's strategic. It is not an industrial metal as we are led to believe. It's a strategic metal, and it is needed. And the countries of the global south are understanding that. And this is why they're draining the LBMA to the second lowest level they've ever had in the history of the exchange, 140 years. This is why they're draining the COMEX. This is why the others stand for delivery. We've talked about this for years, and they have been doing it very methodically and very opaque in their manner, not transparent. And I think it's accelerating. So silver will have its day, and everything that we've ever talked about silver I think will happen in spades. It'll just happen in a manner. It will go from 0 to 100 just like that. We'll wake up and see it repriced or to a whole different level when there just isn't the ability to accumulate it on the exchanges, which are being bled dry. And at some point, all of the people who have silver that would otherwise sell it, they're not going to sell it at the Western price. It will be sold at a price far higher, and probably a price that is then revalued or controlled by countries like China, who, as it is right now, are selling it for $4 an ounce higher in Shanghai. What if it was $40 or $400? It's the same thing as us talking about revaluing gold, where Senator Loomis for Wyoming can say, yeah, I like Trump's idea of the strategic Bitcoin account. We should do that and fund it partially by revaluing our gold that's held by the Fed. Well, there you go. I mean, it's one thing for the Dutch National Banker, the head of the Dutch National Bank, to say, yeah, we're going to revalue gold because it's in the gold revaluation account and it should go much higher to offset our liabilities. But when you see Senator Loomis from Wyoming saying, yeah, we should do this to fund a strategic Bitcoin account, what's the difference if the West revalues it or China revalues it? In essence, a $4 premium to the Western price already is the beginning of a revaluation. So I would say silver is still the most undervalued, probably best potential asset on the planet, regardless of how maddening it has been for the past few years in terms of its counterintuitive price movement and its volatility.
What we're seeing is a long-term strategy playing out in real time. While Western investors focus on short-term gains, China and other nations are thinking in terms of decades. They understand the importance of silver, not just for its industrial uses, but for its role as a store of wealth. And they're willing to pay a premium to secure their supply before the rest of the world catches on. This shift in the silver market is just one example of a broader trend. As inflation continues to erode the value of fiat currencies, tangible assets like gold and silver will become increasingly valuable. The smart money is already moving into these assets, and those who follow suit will be well positioned to weather the coming economic storm. As we delve deeper into the implications of these trends, it becomes clear that silver's role in the global economy is far more significant than many realize. It's not just about hedging against inflation anymore. It's about positioning oneself for the seismic shifts that are reshaping the financial landscape. First, let's consider the strategic importance of silver from a geopolitical perspective. China, as we've discussed, is quietly amassing vast quantities of silver. This move is not just about securing a critical industrial resource. It's about gaining leverage in the global financial system. Silver, often overlooked in favor of gold, is indispensable in the production of high-tech goods, renewable energy technologies, and military applications. In other words, it's a resource that no modern economy can do without. The Chinese government understands this, and they're acting accordingly. By stockpiling silver and reducing their exports, they're positioning themselves as a dominant player in the global silver market. This gives them a strategic advantage, particularly in a world where the supply of silver is already strained. Moreover, the shift in China's silver strategy is a clear indication that they're preparing for a future where the global financial system is no longer dominated by the West. The same can be said for other BRICS nations, which are increasingly turning to gold and silver as a means of securing their wealth. These countries recognize that the current fiat system is unsustainable, and they're taking steps to protect themselves from the inevitable collapse. Now let's talk about the potential for silver as an investment. For years, silver has been undervalued, largely due to the manipulation of the market by Western financial institutions. But this manipulation cannot last forever. As the global demand for silver continues to outstrip supply, the price is bound to rise, and when it does, it's likely to happen quickly, going from undervalued to overvalued in a matter of months, if not weeks. We're already seeing signs of this shift. The premium on silver in Shanghai is currently $4 higher than in the West. This discrepancy is a clear indication that the true value of silver is not being reflected in the Western markets. What happens when this premium widens to $40 or even $400? At that point, the Western price will no longer be relevant. The real price of silver will be determined by the markets in the East, where demand is strongest and supply is most constrained. But silver's potential doesn't stop at its price. It's also about its utility as a form of wealth preservation. Unlike fiat currencies, which can be printed at will, silver is a finite resource. It's tangible, it's durable, and it's universally recognized as valuable. In a world where trust in government and financial institutions is rapidly eroding, silver offers a level of security that few other assets can match. Consider this. Senator Cynthia Lummis from Wyoming has suggested revaluing gold to fund a strategic Bitcoin account. If the West is already contemplating such measures for gold, it's only a matter of time before similar ideas are floated for silver. After all, if gold is to be revalued as a means of stabilizing the financial system, silver, as its less expensive but equally important cousin, is sure to follow. In fact, we're already seeing the early stages of this revaluation. The fact that China is willing to pay a premium for silver and is actively working to hide its true accumulation suggests that they understand its true value. They know that silver is not just an industrial metal, it's a strategic asset that will play a critical role in the global economy for years to come. So, where does this leave the average investor? The answer is clear. Silver is still one of the most undervalued assets on the planet. Despite its recent volatility and counterintuitive price movements, the long-term potential of silver is enormous. The current price does not reflect its true value, and those who recognize this now will be well-positioned to benefit from the coming revaluation. But this isn't just about making a quick profit. It's about safeguarding your wealth in an uncertain world. As the global financial system continues to shift, those who hold tangible assets like silver will be protected from the worst effects of inflation and economic instability. Silver is more than just a hedge. It's a lifeline in a world where the value of fiat currencies is rapidly declining. In conclusion, the world is changing, and those who adapt will thrive. The smart money is moving into silver, and for good reason. It's a strategic asset with enormous potential, and its time is coming. Whether the West realizes it or not, the global financial system is moving towards a new reality, one where gold and silver play a central role. The question is, will you be prepared when that day comes? The time to act is now, before the rest of the world catches on.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.